Okay, so I'm working on some swing trade strategies using the Thinkorswim platform from TD Ameritrade, and it has a paper money option. So once you download the free program, you can log in and you just toggle to paper money, and then it gives you $100,000 to work with. So that's pretty cool. And I was down significantly, but now I'm up again. So I might be doing something right, but it also could just be beginner's luck. um, but I wanted to just mention the strategy I'm working on right now with this. So the idea with this trading is to risk 4, and that's just a ratio to risk. We say $4, for example. Risk, sorry, back up. Risk $1 to get $4, but that's just a ratio. So it could be risk, 25 cents to get $1. Just 1 to 4. That's all. And so the nice thing about that kind of a risk ratio is that you can be wrong 3 times out of 4, and you can still stay afloat. Okay, so I'm just going to illustrate that with a little spreadsheet I made. This is pretty basic, but I'm really horrible at math too. So um, I think pretty sure I got this right. But so this illustrates, okay, so what happens if out of 4 times that I try this strategy, I get them all wrong, then I'm going to lose $4. But if I get them all right, I'm going to get 16. Okay, so that's a pretty good risk ratio. But the other part is that if I only get it right 3 times out of 4, I'm still going to stay afloat. Um, if I get 2 times right, I'm going to make 6. And if I get 3, I'm making 11. Now, I think that probably, somebody who's good at this, like, let's just say nobody's going to get 4 right every single time, right? So let's say somebody who's good at this is going to get something in here between 2 and 3, or maybe 3 point something. And so that's a pretty good return, and that's a pretty good way to manage your risk, right? Because you're not going to crash and burn in this scenario. The most you're going to lose is 4, and that's it. But you're going to gain a lot more than you can possibly lose. So that's kind of the key in my mind, is set up scenarios where you're going to always gain more than you lose, because there are going to be times when you lose. You just got to know that. Okay, so how do you actually apply that, practically speaking, in a trading platform? Okay, so I'm just going to illustrate this with Ford. And so first of all, you have to have a growth stock. And I'm not going to get into that, where you find growth stocks. I mean, you can just Google it. It's not that hard. And I'm currently, for me, that's a bit of a blunt instrument. I'm sure there are better ways to find them. I'm just kind of, just quickly finding them and plugging them into my strategy. So F is Ford, and it has some news because of the electric truck, the F-150. Probably. And so I bought into that today at 14.22 with 100 stocks. And then in order to implement the 4-to-1 risk management strategy, I then put a stop order 50 cents below that. So if the stock goes 50 cents below the price that I paid for it, I'm going to sell it. And so the most I can lose is 50 cents per stock. And then, and that would be on 100, that's $50. And then I put up another order, a limit order, so that that is $2 above, right? So it's 50 cents times 4. And so that way I will at least make $2 if it gets up that high. And of course, the reason you do this is because you might say, well, I'll just do it in my head. Well, you can't, because you don't know what the stock's going to do. The stocks are always like going up and down, right? So it might, when you're not looking, top 16 and then go all the way down to 12 for all you know, right? You just don't have no way of knowing that. So that's why you have to automate it, unless you're just going to plan to sit here and stare at it all day. And it's true that it might also go, past this $2 or $3, and then you'll miss out on that because you you sold it already, you know. And so, well, that's just the risk you take. It's okay. The point is to set up a scenario where you're winning most of the time. You can't get all possible profits. It's just not possible. So you can't try to set up a scenario where that's going to work. But this is a nice automated way because you kind of make a good bet on something and then you just let it run. Okay, so we'll see how that goes. Now, I also want to make the point though that you're not actually limited by this, right? So let me look at this one here, DBX, right? Okay, so so with DBX, what happened is that I came back and I found that it was going up, and so I took out my stop order and I took out my limit orders, and I just kind of followed it up, right? So now I put the stop order at, like, I already made my $2, right? So I bought at 25.22 and it's now up to 28, right? So I put a stop order at 27. It's not quite $2. Maybe I should go up a little more on that. I think it's actually risen since I set that up. And so now I'm just going to follow this up as it goes up, right? So my $2, or in this case it's $1.50 or so, but if I put it up here to 27.22, I would have my profits are locked in, right? So I've got that. But if the stock keeps going up and I see it when I check in on this every day, then, you know, why waste it? Well, great. In that case, yeah, I can keep following it up. I'll put my stop order a little bit higher. And now, next day, maybe I'm making $3. Next day, maybe I'm making $4, et cetera, et cetera. And then if it crashes down at some point, then I've still made my profit. So those are kind of ways of just looking at it. And this is all fairly theoretical at this point with me, and I'm just going to kind of walk through it and see if it works out the way I think it's going to work out.